All right, I'm back again with Guivens Andre. He's on again. I think this is his third time on, and with everything going on with the stock market, we just had to talk again. So,
Yeah.
dude, man, thanks for coming back on again.
Yo, anytime, bro. It's good to be here. It's good to talk some stocks. It's good to talk some wealth. So I'm excited for it.
So, so with everything going nuts, ask away. I'll answer the best I can.
Well, you know me, per usual, bro. I always have tons of questions that I feel like other people might have that might be able to learn. They might be able to learn from it as we have the conversation here on the show. So I'll start away. Um, One question I had for you was the ETFs and options, right? What are ETFs? What are options? Do they coincide? Do they go together? And really, how do they work?
So ETFs are exchange traded funds. Basically, it's just a basket of stocks that are similar to each other. The famous one is like a marijuana stock ETF.
Mm.
What's interesting about ETFs, though, is if you're not careful, you might look in the actual ETF and realize that it's not exactly what you expected. It's not an ETF of marijuana stocks, for example. So you have to do a little research sometimes when you're doing a serious ETF investment. But there's ETFs for everything. You could do a timber ETF. You could do a space ETF. There's any ETF you can think of. There's one for now.
Okay. Well,
Yep.
where does the options come into play?
So options are something different. An options is basically a contract that you can buy and sell in the open market.
Mm.
To have a contract to buy or sell some stock in the future.
Ah,
And at the long one, maybe we can do an example sometime. I usually do an example of like an option on a house, which will
okay.
make it much more clear. So I'll do it really quick. So even you have an option to buy the house for $100,000, for example, right?
Got it.
And I sell you that option for like $1,000. That's
Mm.
how I make my money. It's the fee for selling that contract to you.
Okay.
If the price of that house goes to $300,000,
Mm.
you can immediately exercise your option, buy that house for $100,000, and then immediately sell it for $300,000 and make a $200,000 profit, only putting in $1,000.
That's a lot of numbers, bro.
Did that make sense? I'll try again. If you buy that contract from me for $1,000, right?
Uh-huh.
Okay, you spent $1,000. That's your investment.
Yeah.
The house goes from $100,000 to $300,000.
Mm.
You just made as profit $200,000
Yep.
on a $1,000 investment.
Ah,
That's the extremes of an option in the stock market.
okay.
Now, if that value of that house goes down, then your option is worthless and you're out $1,000.
Okay. Well, I mean, it seems, we all know the stock market it's a guessing game, right? I mean, you have people that try to study it, but it doesn't work out for them. Or would you say that ETFs and options are just as risky? It's still a guessing game, or is there a way to really try and secure your success with ETFs and options?
An ETF is, again, it's a bundle of stocks. So if you are very bullish on the space industry, you can buy a space ETF and you'll probably do really well. I mean, I actually have suggested space ETFs. I think if you hold a space ETF for 8 years, you might actually do pretty well.
Okay.
Um, it's not as much speculation. Options are speculation. It is a zero sum game.
Okay.
Stocks are not a zero sum game. That's why they're investments. Everyone can make money on the stock market
Mhm.
because the stocks themselves are generating wealth through the work and efforts of people in those companies.
Right.
An
Right.
option, though, it's a game between you and I to see who can make money, who cannot, and that's more of a zero sum game.
Okay. Well, where might be some of the best places to purchase ETFs?
Um, Robinhood, E-Trade, all of them have ETFs now. It's
Okay.
gone from being something kind of rare back in the 90s to ETFs for anything now.
Okay. Speaking of Robinhood, I was gonna save them for last, but since you brought them
We
up,
might still need to. Go ahead.
um, let's talk a little bit about like this whole debacle with Robinhood lately, right? I mean, like I know it definitely took me a little bit of time to really understand what was going on, because so many big terminologies was being utilized and so many different concepts was being brought up. For anyone who's watching right now, let's really just really dive into it a little bit and just provide a little bit more insight as to what really took place in simple, regular people terms.
Okay. I'll give you the whole summary based on what I saw.
Okay.
I don't know what really happened. I can only go on the news
Right.
and then interpret it, because some of that stuff was very wonky, very wonky. But I'll give you the basic level, and then we'll break it apart into each section of what happened.
Okay.
What happened was there was a whole bunch of shorts, and then Reddit figured this out.
Well, what are shorts?
Yeah, there's a lot there. Let me go through the whole thing, and then we'll go one at a time. There's a lot there.
Yeah.
So the hedge fund shorted the market. The Redditors realized that they were overextended on their shorts, so they did a short squeeze on the hedge funds. When GME went to about 250, I heard in the news that the shorts had pretty much given up. And at that point, it changed from a short squeeze to a pump and dump, which is where people are talking a lot about some kind of asset to raise the price up, and then they are dumping the stock on people. I don't care what you believe or feel about all of this. That's what happened. It was a pump and dump. And after that, the price fell accordingly, because the stock wasn't realistically valued at that level. It was really supposed to be at best maybe $30, $40, maybe more on future opportunities. But yeah.
Okay. Well, you know what? That you actually answered another question that I had, which you answered it before on this show, but I like asking it because it's something that's so common that people ask me sometimes as well, is how do stocks go up and down? And so apparently just by talking about a stock, if you get enough people to talk about a stock, its price will go up. So that's one way stocks go up. But what are some other ways that stocks tend to rise and fall?
So I'll tell you, this is my hopeful PhD someday. This is my own theory. This is no one else's theory. This is my own theory. There's only two things driving the stock market. It's momentum and it's value.
Okay.
And it's hard to decipher them, but in long scales, my analysis has shown that it's very much you can decipher them. In about 2 years, a stock will typically go back to its fair market value.
Okay.
What's hard to really see, though, is that the fair market value is increasing over time, and it's also subjective, especially when we talk about tech stocks and more, hyper growth stocks. It's very subjective. But if you have a boring utility, man, it's like clockwork. If you're patient, in 2 years, it will go back to its fair market value. And typically the fair market value will steadily increase because they're making money, right? So when they make money, they have more cash and they have more earnings. It's worth more.
Okay.
Momentum will drive away from the stock. And the crazy thing that I've seen, and you'll find this nowhere else. This is my crazy theory. What I saw was the most volatile a stock is when it's at its fair market value. When it's close to being priced correctly, the market's going to move it farther away. There's more speculation. There's more momentum. And when momentum starts, momentum drives itself. And that's when technical analysis and all these other players come in, because they can measure momentum. And the moment they smell the momentum's over, they can get out. Like I could tell. I told Seth, and he was adamant I was wrong. But around the Thursday after it hit $500, GME fell to like 120, and then went back up to 300. And I told Seth, it is never going any higher. This is what is called a dead cat bounce. It's not going to go back up. This is technical analysis 101. Has nothing to do with the value anymore. It's purely a pattern.
Okay.
It's done for. And that's where you take momentum analysis into account. And it's going to go back to its fair value. It'll probably go below it. And then there might be an opportunity to buy GameStop again, assuming it's a good company. Yeah,
you kind of answered my follow-up question, which was going to be, had Redditors and other people continue to talk about GME, um, would the value remain as high as it was? No, it would have still.
No way. It just can't. You
Okay.
can't. Here's why, right? Think about, there's only two investors, you and me. You got in early on, and
Mhm.
I'm wanting to ride the wave up, right?
Right.
No matter what happens, there's a point in time where you're like, man, I just made $300,000. I think I'm done. I don't
Right.
think I need to stay in any longer. I want to take my chips off the table.
Right.
And then it starts to go down a little bit, you know. And I'm still buying, right? I'm just like, oh wow, look at this is going great. I'm just
Mhm.
not I'm not getting enough information, so I just keep on
Yeah.
buying, right?
Yeah.
The next person like you is like, oh well, their chips off the table, my chips are off the table. And
Mhm.
when you get enough of that, then it just cascades down. It doesn't matter. It has to go back to the fair market value eventually.
Okay. Okay. So valuation of a stock, right? We talked about momentum being playing a role in that.
Mhm.
Um, any other contributors to understanding, valuations of stocks? What dictates that?
Well, so I'll tell the audience, before this call, we went through this whole calculator all about a rental property, just for the fun of it. We'll just say for the fun of it. We went through the rental, how much we're getting in a rent. We talked about, the price up front, and we
Mhm.
talked about, what that rate of return is compared to a bond.
Right.
That whole analysis, I did first on stocks. I did that first in stocks.
Oh,
It's the
okay.
same thing. It's just, okay, stock earns this much money. I can buy it at this much. Their earnings potential growth is this much. I believe it. It's the other thing. You have to believe it or not believe their earnings potential. Okay, let me do analysis. Okay, it's this much better than buying a bond.
Right.
I think it's going to grow in price. I'll buy it, and that's it. That's how you do value. There's key subtle differences, right? Some other people will care about cash flow instead of earnings because they don't trust companies. They think companies will just BS their earnings all
Yeah.
the way, and that's where it becomes an art, you know. But the basics are super simple. That calculator that we talked about before the call, and that's nothing. That's piece of cake stuff to do.
Awesome. Well, I mean, you're just kind of leading me to all my questions, which is my next question was, what makes more sense right now to invest in? Because there's a lot of nuances and there's a lot of just
Crypto,
complications things you don't understand with
crypto,
stocks.
crypto.
Yeah. There's a lot of things you just, I mean, for me as a stock owner, like there's a lot of things, that plays a role in whether, because, sometimes I'll go to sleep, stocks are down, but then I'll wake up the next morning and, starts to up. So is it safer or does it make more sense to invest in, cryptocurrency as opposed to stocks?
I would say my experience has told me it's best to invest in something that's boring, that no one's really interested in the moment. Crypto
Okay.
is very interesting right now. But when we were talking, last year,
Last
remember how
year,
it wasn't interesting? I was like freaking out. I'm like, dude, you need to buy some crypto, right?
yeah,
Because my analysis has said it's super undervalued and it's gonna go crazy, and it's still gonna go crazy. But once it gets to like 60K, man, like I can't promise anything anymore. You're on your own. It's the Wild West. 60K, I'm out. Like
yeah,
I'll just say it right now. I could it's probably gonna double from there, but I'm out. But looking for tech stocks that have potential in the future, investment properties that you can see potential. The analysis that we talked about,
yeah.
taking the earnings of whatever investment you have, extrapolating it, it's the same thing. The only difference is if people are aware of it, right? Like GME or crypto, if they're aware of it, they start to drive the price up,
Mm.
and now you're missing out getting in early on. So I try to find stuff that's boring and no one likes, and then holding for a while. Holding a little longer than you feel comfortable with is usually a good idea too. Because if I just held on to my stocks a little longer
Right.
than I was comfortable with, I would make another 2x most of the time.
Okay. Um, Speaking of boring, boring stocks and boring cryptocurrencies, what is the I'm like blanking out here. XRP, right? So
Mhm.
Ripple, right? I mean, I think that's fairly a boring stock. Um,
I
what
love
do you
Ripple.
what do you
Not touch Ripple. Ripple was a very interesting crypto, but when I was in the hedge fund world, I did a full analysis of it. It is very sketchy.
Yeah.
I'm not saying it's not going to do better.
Mm-hmm.
What I'm saying though is, I can't believe I'm saying it like this, but there's other cryptocurrencies that are less risky than Ripple.
Absolutely.
Ripple is very centralized, and that's inherently a flaw in a cryptocurrency.
Absolutely. I mean, I love ETH. It's working for me.
Yeah.
It's phenomenal.
I don't like staking, but that I don't know enough about it, so I could be wrong about it. It could be perfectly fine to stake Ethereum and it'll be completely fine.
Yeah. Okay. Well, here's the last one for you, and we're going out with a boom. It's the last one because it might take you some time to answer, or it might not.
And I'm sorry I didn't answer what a short is, but we can do that again some other time.
Absolutely. Market crashes.
Yeah.
First off, what's a market crash, and what implications does it have for investors who have invested their money in the stock market?
So that's very subjective. I think there's a definition based on like a 20% drop or something. I don't know. I can't remember on the top of my head. I'll tell you what I learned in the hedge funds. I would have answered this completely differently 7 years ago, but when I was in the hedge fund world, I had a different perspective on it.
Mm-hmm.
So the hedge fund I was at, we were doing leverage, right?
Yeah.
And we made like a 200% return on the stock market one year. It was insane. It was just an insane amount of money. And, my worry wart self was like, man, there might be a crash. There never was, by the way. But I was worried, like, oh, man, this is a crash,
Conservative dude, we know.
Yeah. But, my mentor told me something interesting. He's like, yeah, we crashed 30%, 40%.
Mm-hmm.
We would only lose maybe half of what we made. So instead of a 200% gain, we have a 100% gain now.
Okay.
Money in the pocket now is better than staying off sides and then having the crash happen and then missing out on the 10 years of bull market. So my strategy now with it is to stay in, but always look for good stocks, the ones that will last 10, 20 years. Amazon back in 97, Google back in 2004, Starlink, which is about to go IPO. That might be a good one. Hint, 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 hint. And it doesn't matter, you buy Tesla during a crash, crashed from like 360 to 240 at one point back in the old day. How insignificant is that now? Right. It's at like $4,000 if you don't count all the splits. It's at $800 right now, but it would have been like a $4,000 from that price point. So $100 drop of 40% sounds bad, but it really doesn't matter if you expect it to do much better in the long run.
Okay. So we never have to worry about a 100% crash.
Oh, if we worry about that, man. So my CTO who I visited in Miami has a boat. That's my plan. If it's 100% crash, we get on his boat, we go to the Bahamas and get the heck off of those.
Oh yeah.
There's more things to worry about. It's an apocalypse than 100% crash. If there's a 100% crash in the stock market, all your other properties are worthless. All your currency is worthless. It's all done. It's all done for. So
I do not want to see that day.
No.
Yo, Chester, man, you've been amazing, man, answering some of my questions.
Yeah.
It's always a pleasure. Really fun talking to you, and can't wait. So until next time, man.
Yeah, Guivens. Thank you very much, man.
Of course, bro.
Cheers. All right, cut. I'll edit out the rest.
Yeah, man. I feel like we just get better and better at this. I don't know if these go as well for your other people, but this just seems so natural without like any. I didn't have any nervousness when I did the first one, but now I really just like, it's just like, we gotta have like, hopefully when COVID is gone, maybe we can have like an actual setup when we're talking about these things, and it'd be nice. So
do it at your property, or do it while we're having a barbecue at Steph's house. That's like
Steph's crib. Oh man.
That would be out in the back,
The house is all brand new now, so he has the perfect setup. Yep.
Oh man, I want to answer your question anyways with the shorts. If you want to hear it, I would be happy to tell you about it.
Yeah.
The short's very simple. All it is your bet is that the stock's going to fall, right? But so you want to borrow the stock. So you usually do it from broker, but let's say it's just you and I, right?
Yeah.
We're like, hey, Givens, man, give me your GME stock. Let me borrow it from you, and I'll pay you a little bit of a fee. That's how you make your money. I'm like, okay, here's the GME stock, but I want it back, right? I'm like, okay. And I immediately sell it in the market, and my hope is I can buy it back at a lower price and give it back to you. So if I borrow from you and then sell it for $10, if I buy it back from the market for $5 and then give it back to you, I've just made $5 per share that I borrowed from you. What's really nasty though, that's pretty much what happened. GME was like $10. They shorted it and then went up to $300. So these guys, these friggin' hedge funds lost, I don't know, $290 per share. That's why they lost billions of dollars. They lost a 5 to 20x on their short. That's what a short squeeze is.
Yeah.
So you as the broker is like, I want my GME stock back now, please. By the way, you don't have enough money in your brokerage account. What are you going to do? That's the short squeeze. And that's the margin call where they're like, where the F is my money? The broker is like that to the hedge funds. The hedge funds are like, that's why they had to have an infusion of money because they couldn't go through with the short. They couldn't buy the stock on the open market.
Wow. An infusion of money. Was that just like cash coming out of nowhere? Like
they had to ask other hedge funds to borrow money.
Wow.
But what's a few $1 billion for friends? I'm serious. That's what happened.
Hey man, but the fact that people were the cause of this.
Yeah.
Powerful. You see the impact internet and technology and social media has these days, bro. Like,
yeah,
use your voice, you can really do some damage.
Yeah. So. The problem is the pump and dump part, right? It kept on going, and the hedge funds were gone out of the picture, and now it was like the kids on Robinhood that want to be cool and do it, they want to make that money. It's now just a pump and dump. It becomes a pyramid scheme.
Yeah. Hopefully when COVID is gone, maybe we can have like an actual setup when we're talking about these things, and
yeah,
it'd be nice. So
do it at your property, or do it while we're having a barbecue at Steph's house. That's like
that crib. Oh man,
that would be out in the back.
His house is all brand new now, so he has the perfect setup.